Jameel Ahmad's on the line, Global Chief Market Analyst. He's the VP of Corporate Development at FXTM. And Jameel, we catch you in London again.
That's right, guys. I'm currently in London. Thank you very much for having me, and it's always a pleasure.
Well, look, you are a global traveller watching what goes on. Let's get up to speed with market news. Where are we?
Locally, we're looking very positive today. Both the Dubai financial market and also the Abu Dhabi securities market are up over 1%. And although it's becoming a little bit repetitive to talk about it all over the past couple of weeks, oil prices, they're driving sentiment higher. Oil is now close to running in towards $50. We still don't think we're going to get there before the beginning of the second half of the year, but the stronger oil price is improving sentiment. Internationally, I think we've spoken about the Brexit consequences with the upcoming EU referendum vote and both the price of oil a lot over the past couple of weeks. So just to change the tune, what I'm going to talk about today is China. Basically, China today, they devalued the Chinese currency, the yuan, to the weakest fixing in around 5 years' time. This was seen by some as a direct result of the impending anticipation that the Federal Reserve might be about to raise U.S. interest rates once again. So I think over the next couple of weeks, there's going to be a lot of global headlines focusing on China. And as we enter the second half of the year, I do believe the concerns will resume about the slowing down China economy. So maybe the markets will become accustomed to this. Globally on the currency markets, this emergence of optimism that the Federal Reserve is set to begin raising interest rates once again is boosting the dollar higher. This is very strong for the Dirham. We're seeing a weaker euro gradually across the board. Still a little bit of Japanese yen demand, but the stronger dollar is probably going to move that a little bit lower. This again is positive for the Dirham. UK pound, still a lot of sensitivity as you would expect with such a historic upcoming vote. It's stronger today, but in the run-up to the vote, and we're now less than a month away from the impending referendum, there's going to be a lot of sensitivity, and we are still negative views on the British pound in the medium term.
Jameel Ahmad, Global Chief Market Analyst, VP of Corporate Development, FXTM. Jameel, thanks a lot.
Thank you very much, guys.